Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, February 4th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here that the ES is currently holding inside the previous session's range. Very narrow range here heading into the day's trading. Right now trading 32% of average range. Again, the previous session here we were looking for any failure of the previous close to open up a return back toward the previous day's mid. It got very close to that mid there on that pullback and just held the rest of the day. And right now what we have is a 2-day narrow range at these highs as the market continues to hold ahead of Friday's NFP report. We still have a bullish overall trend here, both on a very short-term basis and on a medium-term basis, which means that even if we were to pull back here and take out yesterday's low, it could offer a trap, a bullish opportunity here that could allow for a continuation up toward the previous week's high and the previous month's high. Right now, we may see further range-bound action before a shakeout occurs, but again, given the trend, if we were to break down below the previous session's low or into the breakout midpoint here, that could become a bear trap that allows for a turnaround back to the upside. A breakdown below 3,800 and a failure to reclaim that level could open up a continuation to the downside in that scenario. Very similar to what we saw back here, where we had a narrow day here, it broke down and just screamed lower. That could certainly play out, but again, right now, it's mostly range-bound price action, very compressed range over the last couple of days, with still an upward bias heading into the 3862s. Let's take a look here at the NQ. With the NQ, you'll see we had a narrow range in the previous session, not quite as narrow as the ES. Something we talked about in the afternoon trading room session was any failed low here, a push below the previous session's low, could offer a trap and a reversal back up that could take you again into that previous week and previous month's high. We're looking for a continuation into that level up above 13,600 right now. Got very close to it yesterday, getting a high up there at 584.5. Again, the expectation is that by the end of the week here, we have tested the previous month's high price here at around 13.6 and perhaps gone through it a bit. Now, right now, very similar here to the ES. It is a narrow couple of days here, but still the directional bias is bullish on a short-term basis and on a medium-term basis, which continues to suggest to buy the dips and defend any pullbacks until proven otherwise. All right, let's take a look here at crude oil. You'll see with crude right now, this one is up about 0.6% and remains above the breakout point of the 15-day narrow range. We've quantified this range down here. We've talked about the potential for a 6-point move from these lows. From the low here, 51.64, you add 6 points, you get 57.64. We're very close to that now. The previous session got as high as 56.33, so we still have another handle of range at least to the upside, perhaps even more as this thing continues to push higher. If we're measuring from the breakout point, say from this low here, then again we may be looking at a move somewhere as high as 59 to 60. So we still have some more upside here to play with. At the moment, there's just 34% of ADR in a very, very narrow range. That's a 48 tick range right now. That's super narrow at the moment, and may need a bit of a pullback here. Again, even if we pull back as deep as 54s, it could provide a buy opportunity for a continuation toward 59 or even as high as 60 up ahead. So right now, everything still looks bullish on a short-term basis, on a medium-term basis, and pullbacks remain buying opportunities until proven otherwise. Lastly, taking a look at gold futures here, you'll see that gold continues to show weakness here. A failure to really find acceptance above the 1880s, 1874s that we've been talking about has led to a bit of a flush here. We're now through the tails of the previous two rejections here, and again it looks very reminiscent of what happened back here, where this thing started to drop toward 18K or 1800 rather, and 1766. So those may be the next two downside targets for gold as this thing continues to drop. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.